Today, we will talk about what a dividend rate is and how it is calculated. The dividend rate is the total expected dividend payments from an investment, fund, or portfolio expressed on an annualized basis plus any additional non-recurring dividends that an investor may receive during that period. It is closely related to dividend yield and is sometimes used interchangeably. The dividend rate is an estimate of the dividend-only return of an investment such as on a stock or mutual fund. Assuming the dividend amount is not raised or lowered, the rate will rise when the price of the stock falls. And conversely, it will fall when the price of the stock rises. This means that mature companies that aren't growing very quickly usually pay the highest dividend yields. The calculation of the dividend rate involves multiplying the most recent periodic dividend payments by the number of payment periods in 1 year. For example, if a fund of investments pays a dividend of 50 cents quarterly and also pays an extra dividend of 12 cents per share because of a non-recurring event from which the company benefited, the dividend rate is $2.12 per year. The dividend payout ratio is one way to assess the strength of a company's dividends. When the payout ratio is lower, it is preferable as the company will be disbursing less of its net income to shareholder dividend payments, making the firm and the payments more sustainable. Income-seeking investors often search for companies that demonstrate long histories of steadily growing dividend payments. These companies, dubbed dividend aristocrats, must exhibit at least 25 years of consistent and significant annual dividend increases. Some of the best investment apps include features or functions that enable users to identify which companies offer dividend payouts. Here are 4 key takeaways. 1. Dividend rate, expressed as a percentage or yield, is a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. 2. Companies who generate a healthy profit often pay out dividends. 3. The dividend payout ratio is one way to assess the sustainability of a company's dividends. 4. A dividend aristocrat is a company that has increased its dividends for at least 25 consecutive years. Hope this would help. Thanks for watching.